Hey, everybody. Thank you so much for tuning in here today to my very first installment of Stay Tuned with Stacey. That's right. I gave it a name. It's official. Stay Tuned with Stacey. It is just a talk show. I'm going to go ahead and call it a talk show where I just talk about lifestyle, the things that we go through in life, things that I feel that will inspire you, things that I feel that you just need to know. So I'm super excited about my first guest. You have seen him with me before. If you've been following me for any amount of time, you have seen him here before. And that is my personal accountant, Mr. James Lee. He's been in business over 30 years and has so much information to share with you. Entrepreneurs, solopreneurs, fitpreneurs, independent contractors. Hey, if you are your own boss, then you are in the right place. If you are a new business, you are in the right place. If you are thinking about starting a business, you're in the right place. And if you're an existing business and you just need some reminders or confirmation that you're doing the right thing, then you are in the right place. So I have Mr. Lee here today because a couple of weeks ago, I would say about a month ago, this is around the time that everybody's getting their goals together for 2018, and I'm no different. I was getting my goals together, and then something just hit me that, oh my gosh, I don't have my taxes together. I don't have my money together. And I just had like a little mini panic attack. And I'm like, oh my gosh, what is happening? And then wait, calm down, hold on. You're okay. You've been doing the right thing. And you have Mr. Lee's accounting firm handling your business. Exactly. Calm down. But then it also dawned on me that if I had a mini panic attack and I had it together, there may be people that don't have it together. They're not thinking about it. They're not having panic attacks, and they should be having panic attacks. Okay, so this information is just going to uplift you, inspire you, and hopefully set you on the right track to running your business the right way according to what you're supposed to be doing with IRS and just doing the right thing. So again, super excited to have my first guest on Stay Tuned with Stacey, and that is Mr. James Lee. Clap it up.
Thank you, Stacey, for that warm, beautiful welcome. I want to thank you all for being here, and I hope that I can share some of my knowledge with you of my 30 years of being in private practice. I have clients from all walks of life, business, personal, estate work. We do every phase of accounting work in our office. And as Stacey said, we've been in practice for 30 years, so I think I know a little bit about the business, and I think I'm knowledgeable. I think I'm knowledgeable enough to share some of my information with you that can maybe help you to manage your business and your expenses so that you can get the most out of your business, your tax deductions that you qualify for. And this is what Stacey wants me to share with you today. And if you are an entrepreneur, you have a corporation, you want to know that these are very important ways of running a business by incorporating, or you can be a sole proprietor as well. So you don't have to be a corporation to be successful in business. But the most important thing is that you keep track of all of your expenses and your income. And one of the ways of doing that is having a business account. Whether you're doing multi-level marketing online, or whether you have a website that you have set up and you're selling products or goods online, or you have a storefront, you need to have a legitimate business set up. A business account, okay, is very important so that you don't commingle funds. The IRS does not like when they see clients commingling funds. That meaning what I mean when I say commingling funds, taking your, say, personal money and putting it in with your business income. Okay, because then what happens is if you get audited, the IRS is going to look at that income and say, hey, this is all from your business. And you have to then prove that it's not. And sometimes it's not that easy to prove because you didn't keep proper documentation of where the money came from and how it got into your account.
Well, you brought up a good point. Sorry to cut you off, but you brought up a good point about business. And just saying the word business it just triggered all of these ideas in my mind. And before we started recording, I asked you a question. I said, well, yes, everybody wants to be an entrepreneur. We're talking about social media businesses popping up. We're talking about online businesses, digital products. We're talking about storefronts, but how do you know that you're like a real business? How are we determining that you're a real, are you a business? You call yourself a business because you're collecting money from people, but what should a real business do?
Well, if you're collecting money, whether you're in sales or whether you're in doing consulting work, if you're collecting money, you're considered a business. You're an entrepreneur, and I would say that if you're making $5 a week in business from money that coming from sales of the merchandise that you're selling, you're in business, okay? And you have to think as a business person.
Yes.
And in thinking of as a business person, meaning keeping track of your income, your expenses, deciding whether your business is going to grow into a larger business type. And then what you need to do is consider whether you want to incorporate your business, whether you want to set up an LLC, or whether you want to set up a subchapter S corporation, or whether you want to set up a C corporation. There's various type of business entity that you can set up, and that will help you to know that, hey, I have a business. Okay, you can also be an entrepreneur. You don't have to be a corporation or an LLC. You can be an entrepreneur, but your most important thing is that you do the right thing as a business person. You've got to think business, and you got to keep track of certain things as a business person, because if you don't, you can lose out on all your deductions, and you're working for nothing, because of the fact that the IRS does audit businesses a lot. And so therefore, if you have I always say you have your ducks in a row, then you can go down there, and you can have your representative go down there and waggle his tail and not keep it between his legs, okay? Because then he can speak with authority if you have your documentation and paperwork in order. And it's very important to do that. Keep your paperwork in order, not only at tax time, but throughout the entire year. Okay.
So what I believe that I heard you say was, or is, that once you are collecting money from people, whether it's, and this is a big misconception that I see all the time, whether it's $1, whether it's $5, whether it's $100, $1,000, $10,000, from the smallest amount to whatever the largest amount is, once you are transacting that money with a customer, you are considered a business, and you can be audited at any time.
Yes, ma'am.
So to really protect yourself from that and take advantage of all these deductions that are out there for you, you're going to have to keep your business legit and separate, and not commingle the funds in your personal account. True. So basically what I'm hearing is also that outside of just putting money into your personal account, you need to first have a business account where you are putting money into. And before you even open the business account, you need to establish a legal entity.
Yes.
Whether it's a LLC, whether it's a S Corp, whether it's a what about DBAs? Are DBAs any good? Are they,
DBAs are good.
Why are people just jumping right to LLC? Can the DBA get a little love too?
Yes, the DBAs can get a lot of love.
When do you know to because people make you feel like, oh, DBAs, they're not legit, but
no, DBAs can be legit. And I always say, if you're going to set up a DBA, you want to also get a tax ID number, not use your social security number for the DBA. And you can go down to Mineola if you're in Long Island, or if you're in Brooklyn, you go down to the administrative office and you fill out the forms for DBA. I think the forms are a Bloomberg form 201, and you have to fill it out in triplets, and you take one and have to have them notarized, and you go down to Mineola and you get them notarized. I'm sorry, you get them stamped by the county clerk's office, and you take one to the bank, and you take one. They keep one copy, and you keep a copy for yourself, because you have to give it to the bank when you go to open up your account.
You need that to open up your bank account.
Yes, and then you can then get your EIN number under, if you're doing business, if it's James Lee doing business as, that's what I would get my EIN number under. And this way, when I report that on my Schedule C, I put that number on there, and the IRS knows that I am a business, a legitimate business now, okay? As opposed to using your Social Security number. I like to keep everything separate. You know, they say that there's a place for everything and everything has a place.
Yes.
I believe in that very much in my practice and in my life.
Okay. And also, I also feel that, and I went through this too, and I know a lot of you can relate. When I first started my business, there was no funds coming in. So just the thought of hiring a professional, like an accountant or anybody, maybe a cleaning service or any professionals that are going to help your business as a new business, you kind of think twice about it because you want to try to do it yourself to save money. But sometimes you save money, but you eat away your time. I just found that, you know what, it was an investment and time is so precious. And it really worked for me to hire an accountant to handle my business and to also handle the bookkeeping. Because we all have dreams that we can handle this bookkeeping on our own because there's QuickBooks, there's Quicken, there's TurboTax, there's all these things that if you're really disciplined, you can handle this stuff on your own and bring it to your accountant. But for me, running multiple businesses and taking care of my home, my family, it was great for like a month. But by the second month, everything was, I couldn't tell you what happened for like 2 or 3 months. So I would say, I mean, in my opinion, it's great to hire a professional. That's one of those things that you have to put out money to get the money back, I would say, because you need that record. You need somebody that's going to help you to just make it easier.
Exactly.
So what do you say about that investment? Should they try to do it on their own?
I would say that, hey, listen, if you have the time and the energy and the knowledge, I would say try to do it yourself. But I would say at some point in time, you may have to source it out to your accountant or bookkeeper to take care of it for you, because of the fact that I always say I don't practice medicine because I didn't go to school for medicine. Okay. So I always say let the person who practiced the profession do their job for you. And this way you may have to, you know, it's going to cost you some money, of course, but in the long run, it can benefit you because of the fact that they know what to deduct and they know what to keep track of and they know how to keep track of it. And this way, like in my office, I keep track of my clients' bookkeeping work. And at the end of the year, I don't have to be calling them to say, listen, where's this receipt? Where's that receipt? Because I always advise my clients to pay for everything by either a debit card, credit card,
business debit,
or
business
check.
credit. Yeah.
Yes. Okay. Do not pay for things with cash, if by all means, if you can avoid it. Because this way you have a paper trail, and the IRS likes and would prefer a paper trail if you were to get audited. Hopefully you never have to be audited, or hopefully you never get audited. But hey, listen, there's a possibility that anything could happen out there because they are hiring agents now to do more auditing work. Okay, they had slacked down on it, they had cut down on it a bit, but now they're getting back into it, and now they're even sending your accounts now that you owe to collection agency, which they didn't do in the past. So now you will have collection agencies calling you if you owe money to the IRS. Okay, harassing you about the money, and I'm sure you don't want that.
No.
So basically, I would suggest that if you're running a legitimate business, hire a professional person to keep track of your books for you, keep track of your records, and this way, at the end of the year, you don't have to go through those panic attacks like Stacey just did.
You might still have those
and
panic
you may still have
attacks.
them. You may still have them,
Because you have like a little post-traumatic stress.
You're gonna realize that, hold it. Oh, I have an accountant.
I'm covered.
I'm
Oh
covered.
my
I have my
gosh.
accountant that's taking care of my books, and he's got all my records there in his office.
Oh my
So
God, it's the
basically,
best feeling.
you know, when it's come time for me to do my taxes, I don't have to. He called me and said, "Hey, Stacey, your taxes are ready. Come down and
Boom.
sign, and you're
Boom.
good to go." So this is basically, you know, what you want in, you know, peace of mind. That's why I call it peace of mind.
That's exactly
Okay?
what it is.
Yeah.
So, you know, I hear what you're saying, and some people might be having panic attacks because they don't have anything for them. They've been, you know, they're in an online business. They're selling digital products.
Right.
They're in one of these MLM companies that are selling jewelry or makeup, cosmetics, or whatever.
Yes.
And they've been collecting money all year. So it's December 13th, 14th. I don't even know what day it is.
The day's the 14th.
But they've been collecting money all year. Is it too late for them? Should they just wait till 2018 to just kind of get it together? Or should they try to get all of their paperwork? Because, they may receive a 1099. They, may not be able to account for some of the cash. Maybe someone in the pocket, someone in the account,
Yes.
some went toward gas,
Right.
So is it too late for the person that has already been collecting funds all year? It's December. What should they do?
It's never too late, because you have to report whatever income you receive from these entities that you're doing business with if you're making income. But
I'm talking about the person that's not the business yet.
Yeah, I know. I understand that. So I'm saying, but if they're receiving money from a company, that company is required to give you a 1099 if you receive $600 or more in income as a small business person. If you're selling online, if you have a storefront or whatever the case may be, and you're making money, you should have a business account. You keep a track of your expenses, and yes, basically that money has to be reported to the IRS, and it's not too late for you to go back and retrack all of your expenses, okay? Because you do need to have all of that when you go see your accountant before April 15th.
Right.
If you are a sole proprietor, and if you're a corporation, of course, you have to go before April 15th if you are S corporation, or if you're a C corporation, then you can go around, you have to go before the 15th of April. All right? But yes, you definitely need to have your ducks in a row by having all your income and all your expenses, and it's not too late. But however, if you're thinking about setting up a corporation, I would say wait until the 2018 year to set up your corporation, if you have not set up a corporation already, and if you're thinking about setting up an entity, whether it's a LLC, whether it's a C Corp, whether it's an S Corp,
DBA.
Or DBA. If you haven't done that thus far for the 2017 tax year, I would say wait and do it for the 2018 tax year. The reason why I'm saying that is because
That was my next question.
the monies that you've made thus far cannot be classified as a business entity income, okay? It's going to be under your personal name right now because you did not do it earlier during the year. And the 1099, if you're going to receive a 1099 from any companies, it's going to be in your own personal name.
I didn't even
this
think
is
about
why
that.
the income has to be reported under your personal name. So then in 2018, if you set up an entity, then you want to give that the companies that you're working through that's paying you income or putting money into your account, you want to give them that EIN number and your corporation name, whether it's a LLC, S Corp, or whatever, as long as it's an entity or sole proprietor, okay? You want to give them that EIN number and your business name so that they can pay you a check, or they can deposit the money directly into your business account, which you must have a business account, by the way. And this way, for 2018 year, then everything is going to be filed through your corporation. And this to give you some information, some knowledge. And don't tell anybody this, and don't tell the IRS this. They don't audit corporations as vastly as they do sole proprietors and entrepreneur business. Okay. The corporation does not get audited as much as the self-employed person. So keep that in mind. All right. Okay.
Yeah, I just had an aha moment as you were talking. Like, I get all my downloads while you're speaking or whatever. It just dawned on me that what you just said, it just clicked that, okay, so they've been collecting money all year. They're going to get a 1099 in their name.
Yes.
That's another reason why it is too late for you to do it now. Even if you were to change it around and try to give it to the company or whatever. So basically what I heard you say is that the reason why it's too late is because the companies are probably not even going to accept the name change or the legal structure change until next year, because they're wrapping up their tax stuff, and that's going to be too complicated. So make sure that if you are starting a business in 2018, you're starting a legal structure in 2018, you're going to open a bank account, make sure that you give the company that you're working with or for, give them your new information so that it can work out for 2018. So give them your EIN, give them your new business name and your new legal structure so that everything will transfer from your personal name to the corporation or business name.
Yes. And the way to do that is only you can go online and there's a form from the IRS. It's called a W-9. And that form basically is what is required for you to do it legitimately to the person, the company that's paying you money. It asks you on that form for your business name. It asks on that form whether you are LLC, a corp, C corp, S corp, or what type of business you are, and then it asks for your business address, which can be your home, or well, if you have a storefront, it can be your storefront, whichever your business is run from. And then at the bottom of that form, it then asks you for your EIN number or your social security number.
Okay.
If you are an entity, of course, you're going to put your EIN number. If you are a sole proprietor, which is an entrepreneur that did not set up a corporation, then you would put your social security number. If you did not get an EIN number, which I strongly recommend that if you're going to go into business, get an EIN number for your business, and you can, and it doesn't have to be a corporation or entity to have an EIN number. You don't have to have that to have an EIN number, okay? And basically, this is what you would use to send to whoever's giving you money as a business person. You will give them that W-9 form, and that will then tell them that, oh, this person is a business, and all of his income has to be, his checks or deposits, whatever, has to be under his deposit into his business account in his business name, and that will cover you and protect you. Okay. And also, if you set up an entity, even if you did not do any business, because a lot of people think that, oh, I didn't do any business in my corporation, my LLC, or my corp, or my C corp, or my S corp. Just because you didn't do any business, you can have zero income. You are not in compliance until you file that tax return. I don't care if you set up a business on the last month of the year, okay? Once you get that, once that business is approved, whether it's in December, whether it's the 31st of December, you must file a tax return for that particular year that you set up that corporation, all right? Because if you don't, and it depends on what type of corporation it is, you can get hit with up to a $1,500 fine.
Wow.
Okay?
Okay, so we have a quick question, and then we're going to go into
Yes.
the bullet points that you
Yes.
wanted to talk about.
Yes.
So we have a question from Dawn. She says, is it true that I can write off personal development courses or associations?
If you are going into
So I guess if you are a business person and you got a business coach, and they're getting you all, giving you business strategies and stuff like that, or I believe that's what she's asking.
yeah,
So,
I think that's what she's asking also. So
want
yeah,
to
so
know
if it's helping you to in a different career and helping you to, and you're going to make money from that career, then you can write off those expenses. Yes. Okay. All right. If your employer tells you, for example, to give you an example, if your employer tells you, listen, you have a bachelor's degree. In order for you to get a promotion to a different position, you need a master's degree to do that. Then, and you go back to school and get your master's degree, yes, you are able to write off those expenses, okay, for that education that you paid for. Mm-hmm. And the same thing in business.
And memberships also.
Yes.
Memberships.
Yes. If you're going into business and you need to get some knowledge on the type of business that you're going into, yes, you're able to write off those expenses as well. If you're going to classes to get knowledge on running a business, those are tax deductible items, as long as you go into that business.
So what I just heard you say is that you can get tax deductions for personal expenses and being in associations if it is directly related to the type of business that you're in or going into.
Yes, that's correct.
So would you like to grab a little water before you get into your bullet points? Thank you for those questions, Dawn.
Very good question, young lady. Okay, so without further ado, I just have some brochures here that my office provide to our clients, and this one is choosing your business entity. Now, a lot of people don't know what type of business entity to set up. So when clients come into my office, they're not sure whether to set up an LLC, whether to set up a C Corp, whether to set up an S Corp. So I ask questions regarding what type of business they're going into. And depending on what type of business they go into, then I will advise them which one is the best for them to set up. Okay? So this is a good brochure to have. And you can Google these brochures as well. But you're better off talking to a professional person, like an accountant, perhaps a lawyer, and they will give you the right concept of the type of business that you want to set up, depending on your product that you're going to be selling or whatever you're going to be doing. Okay, and also a lot of people. You don't have to have a office or storefront to run your business. A lot of people can run their business from home. All right,
and that's what we were talking about.
Yes.
All those online businesses,
yes,
they're from home. Digital
exactly.
products, they're all from home.
Yes, and if you're running your business from home, the IRS requires that you set up an office that is only a room in your house where there's only office equipment. You're not allowed to have, unless depending on what type of business you're in, you're not allowed to have clothes in that closet. You're not allowed to have a TV in that room. Like I said, but it depends on the type of business that you're going into, and you will then confer with your accountant as far as what you can have in that room and what you can't have in that room. All right, but you can run your business from home, and you can take the deductions for all of a pro rata share of all of your household expenses. Not, I shouldn't say all of them, but let's say your utilities.
I'm like, all my household
your
expenses?
Yard care, your repairs on your house, okay, your mortgage interest, your real estate property taxes. So basically what you want to know is the square footage of your house, and then you would have to tell your accountant what is the square footage of your office. And based on the square foot of your office, you're allowed to take a pro rata share of various expenses. All right, I'm not going to go into all of the expenses that you are allowed to take, but just know that you can write off a lot of your household expenses that you pay to run your business from your home. Okay, so keep that in mind. Very important.
Okay,
all right,
I'll take that. So what I'm going to try to do is scan and upload these and put them in the files on my Facebook page. Do you have this in a digital form?
No, I don't have it in a digital
So
form.
what I'll do is I am going to scan and upload these, and hopefully I can create a file on my Facebook page where you'll be able to see these brochures, okay?
Very helpful brochures. And as well, also tax tips on people who own real estate property, the things that you can write off in your real estate business. Not real estate business, but if you have property that you're renting out, okay? Again, it's very important that you keep track of those expenses as well, because and a lot of people don't realize that when they purchase a home that there's going to be used for rental property, that they are allowed to take a depreciation on it. Now, I tell my clients you must take the depreciation, because even if you don't take the depreciation, when you sell that property, you have to add it back as if you did take it. So basically, in the long run, over the period of time, the 27 and a half years, in tax savings, the government is actually paying for your property for you in tax savings. However, regarding the depreciation, however, when you sell that property, the government says, okay, now we want our money back that we allow you to take, because of the fact that we saved you money on your taxes, because by taking the depreciation, you're going to have 9 times out of 10, you're going to run into losses on your real property. Okay, so it's very important that And I've seen a lot of, and I'm not trying to put anybody down out there, but I've seen a lot of accountants in my 30 years of business. I've seen a lot of tax preparers, accountants that did not take a depreciation on their properties. And not only tax preparers and accountants, but even some people who try to do their own taxes do not take the depreciation on their property. And again, as I say, I can't reiterate this enough, that if you don't take it and you sell that property, there's no way around it. You must add it back. Because if you don't, you're going to get a letter from the IRS, a CP 2000. Okay? That's the letter that the IRS sends out.
So some of us don't have the rental properties yet, but I see that Dawn says she's going to take that information anyway because that's her 2019 goal. Additional stream of income would be rental properties. So that was a great tips for people who already have rental properties and for people who have it on their vision boards for 2019 or next year. And
I always say I don't like to classify people as poor people, but that is the low income people's tax deduction write-off, because we don't have the money to buy, a lot of us don't have the money to buy stocks, invest in big companies and stuff like that. So this is the little man's way of getting tax write-offs. And one other thing I have to reiterate about real estate property tax, real estate investment, if your AGI, adjusted gross income, goes over $150,000, just know that if you have losses from your real estate property, you will not be able to deduct them in the year that your AGI is $150,000 or more. All right, it's because it would be considered passive income unless you are a real estate broker or a real estate salesperson and can prove to the IRS that you spent 720 hours a year running your real estate property business. Okay? It's very, very important that you remember that. If your AGI goes over $150,000, your losses on your real estate property phases out. It starts phasing out, and it can phase out 100%. Now, however, you don't lose those losses. They are called passive income. So they stay on your tax. They stay with you until you sell that property. And when you sell that property, then you can recap all of those losses and offset your capital gains. Okay. So there's a lot that you can. There's a lot of information that you can get from if it depends on what type of business you're going into. So you have to make sure you ask the right questions, and you have to make sure that you have someone who's knowledgeable about the tax laws and the tax consequences. Okay, whether you renting, whether you have a business, or whether you just a sole proprietor. Okay.
So basically, it boils down to doing your homework, doing your research, understanding these terminologies, so when you go speak to a professional, it doesn't sound like a different language to you. Also, hey Alexandra, thanks for tuning in.
Okay, this is a brochure on starting your own business. This is the first one I should have showed you before I showed you all the other ones.
Oh, that's okay.
But this one I'm going to give Stacey also, so she can post it online so you can have it. And the last one is tips on being a self-employed taxpayer. Now, we spoke about, if you don't want to set up an entity, you can be, a self-employed person. But again, I reiterate that you should put your self-employed business under some business name, whether it's under your personal name, James Lee, DBA, L&L Accountant. You can make, you can do something like that, and then get a tax ID number under that particular name. Okay. All right. All
right. Is there anything else you wanted to talk about as far as starting a business, or you feel like we covered it all?
I think we covered most of the material that's about starting a new business. Basically, one of the things, depending on what you're doing, if you need a business loan, you may want to go and get a business plan. Depending on what type of business you're opening, if you think you're going to need a loan from a bank, then of course you want the banks 9 times out of 10 wants to see a business plan. What your short range goals are going to be, and what your long range goals are going to be. What you have to bring to this business as far as your knowledge, your educational background, and things of that nature. The banks probably not 9 times out of 10 they're going to want to see all of this, and they want to know all of this. So it's good to set up a business plan where you want to be in 2 years, where you want to be in 5 years, or where you want to be in 10 years hence. Okay, very, very important, these aspects of being in business. Okay.
All right. Wow. Well, that was amazing. That was amazing. That was a lot of information. Some things were just reminders. Some things were confirmations.
I have some other things I want to go through also.
Oh.
If I have time. Okay?
No, you got time.
Okay.
We got time. We got time.
All right. One of the things that I do for my clients also is I send them out this form here for those of my clients who do not want to pay for our bookkeeping services on a monthly or quarterly basis. I say, okay, when you come to me, what you're going to do is fill out this form. Okay, it gives you a breakdown of all of the expenses and deductions that you can take. So all you have to do is add up your, let's say for example, your gas receipts. Add up your gas receipt, and there's a column here that says automobile fuel. You plug in that number for me, and then on the back it tells you also about depreciating your car if you use a car for business, or if you use your house for your home office. It gives you a breakdown of what we need to be able to deduct those things, and also if you bought a computer for your business, or some kind of equipment to run your business, it explains to you that you have to give us the receipt, or you have to not give us the receipt, but you have to write down the date that you bought that item, how much you paid for it. And then you don't have to give us the receipts for these things, because we are going to have you sign off on this, and this is going to be our I call it Bible, to say, okay, this is what if you get audited, this is what the client gave us. And this now takes the burden off of me, because I always tell my clients to make sure you save your receipts, because if you get audited, it's hard for me to represent you. I like to go in there wagging my tail like a dog instead of putting my tail between my legs and not have any ammunition to fire with. Okay, so I like to shoot from the hips when I go to an audit. And just to let you know that I haven't, in my 30 years of being in private practice, I think I may have done 2 or 3 audits. My clients do not get audited, and I have clients that's been with me for the onset of my business. Okay.
Wow.
From the onset of my business, I have clients that have been with me for 30 years of my private practice. All right.
Just a little baby in the game coming through.
Okay. There's another thing that I want to show you. This is for. This is what we also give some of our clients who wants to do their own bookkeeping work. It's called a business tax record book, okay? And this in here basically gives you all of the information that you need to write off your business expenses, as well as the other form that I gave Stacey. Now this one I can't give you. And this one here is for real estate. If you own real estate, we have a booklet that, that you keep track of your expenses through your real estate, with your real estate business. Basically, all of the deductions that you could allow to take with your real estate business. So, we help our clients as much as we possibly can by giving them giving them things that they need to help themselves to get, because one of the things that about my practice is that I work for my clients. Okay, even though I'm policed by the IRS, very heavily policed by the IRS, I work for my clients, and I try to give them every deduction legitimately that they are allowed, as long as I know that I can get a documentation from them at the time. If they get audited, I can go back to them and say, okay, I need this, this, and this, and that, and they can go into their files, because I always tell my clients, keep all your receipts, keep them in an envelope. What I do this is what I do, okay? I keep an envelope right in my door of my car, okay? When I go to buy gas, whether I put it on a credit card or whether I pay cash, and I never pay cash for gas, I always put it on my credit card. I take that receipt after I buy my gas, and I get it open. When I open my door, I put that receipt right into that envelope. And at the end of each month, I give that envelope to one of my staff in my office to file it away. Okay? Because at the end of the year, from my credit card company, I'm going to get a year-end statement to show how much I spent in gas, how much I spent in tolls, how much I spent at Staples for supplies. And now I can deduct those things without having to go through each one of those little receipts and try to depict how much this and how much that. everything is because I have American Express and I have Capital One. I have a Chase card. So between those three cards and everything in my office is paid for by check. Okay, and I don't pay anything by cash because, listen,
It's hard to keep track of
I
it.
want my deductions. So if a person wants to say, okay, I'll do this for you for $50, but you give me cash, I say, okay, I'll give you cash, but you give me a receipt. Okay, you must give me a receipt.
That just brought up a good point, which I totally slipped my mind to ask. Everything now, hardly anybody's using cash anymore, and we're using debit cards and we're using credit cards. Do we have to still save receipts like back in the day, or can we just, the bank statements are very detailed now. And when you do bookkeeping, everything goes auto into categorized.
I like to keep my receipts, Stacey. I'm old school.
I'm like, Chuck, that is one thing I did. That don't give me a panic attack now, because that's one thing I didn't do. Now, when I pump my gas and it says, "Do you want a receipt?" I'm like, nope, because my bank statement shows that I got gas.
Right.
So, oh gosh.
Yeah,
what are you telling me now?
I'm old school because I got audited once. Okay. And you know what happened?
But the bank statement,
You know
isn't
what
that
happened?
official?
I mean, this was going back many, many years.
Okay.
I got audited once, and I had my ducks in a row. And you know what happened? I went down there and I represented myself, and the IRS had to give me money back.
What?
Yes, because of the fact that I dotted my I's and crossed my T's as my professor in school taught me. Okay?
Wow,
They had
wow,
to
wow.
they had to send me a check. You know how
What?
God, I felt.
Wagging your tail, like you would say, right? You don't walk out with your tail between your legs.
I went down there with my gun cocked, and I had it there, and it was loaded.
I got this. What else do you need? What else you want? I got it.
I'm old school.
So
I
just tell,
believe
just
in-
set
I
the
believe
record
in-
straight. What
I
is the
believe
deal
in
with the
keeping
receipts? Because now I'm like, okay, I throw away receipts, especially if I know it's showing up on my bank statement. Do we keep them or not?
Well, you know, I always tell people to keep them if you can, because if it shows up on your bank statement, let's say it says Staples, okay? Because anytime you go to Staples,
it's
it
not
shows
itemized.
up it's Staples, so you know that I can fight for you then there, okay? So there's no ifs, ands, or buts about it, okay? I can say, hey, IRS. This is Staples. This is office supplies. Even though you might have gone to Staples and buy chewing gum or candy, okay. But I can fight for you. I have more ammunition to fight for you
I
in
gotta
that
do
case.
better.
And some things when you buy them, they don't spell out what it is that you're buying.
Yeah.
And it may
It's
you may go-
itemized on the
Yeah, you
receipt.
may go to Costco and buy something that's for your house. As opposed to whereas if you got that receipt, I can see that you bought toilet paper for your office, you bought paper
Print
towels for
paper
your
or
office,
something like
print
that.
paper. Yes,
You didn't go buy a comforter or some CDs and DVDs.
Exactly. Because a lot of stores now you can buy personal items as well as business items from them. So this is why it's important to keep the receipt as a backup.
Well,
okay?
2018, I will start saving the receipts again. I think it might be too late for me to come to you with my little 2 or 3 receipts for the last 2 weeks of December, but I will keep that in mind because the receipt, so the bank statement will say Staples, but the receipt is going to say I bought pencils, pens, candles, whatever from Staples rather than personal things.
Yeah.
You know?
Very true. Like I said, if it says Staple, I can fight for it, but it's better to have that receipt to back it up.
Yeah.
And so this is why I thrive on telling my clients to save your receipts.
You caught me. What? I thought I was all okay. All right. So do you think that's you covered everything?
I think I covered most of the things that I can cover at this point with people. Of course, if you need other information, my office is located at 1315 Grand Avenue in Baldwin, and my telephone number is 516-292-1983, and we do have a website with a lot of information on it. We post things on the website. We have question and answers on the website, which is www.landaccounting.com. Again, that's LANDACcounting.com. Okay, so if you can always go in there, and there's a lot of research on there, a lot of information on there that will help you through your tax season and through your life. So take advantage of it.
Oh, you got a little life lessons on there too. I gotta make sure I go back and check that out. Anyways, like I was saying before, thank you. This was amazing. This was truly, truly amazing. Number one, I'm kickstarting this new Stay Tuned with Stacey.
Yes.
You're my first guest.
Thank you.
You took time out of your day, out of your busy practice to come and speak with me. I don't take that for granted. Anytime people show a little love to my vision, I feel like really flattered. I feel really, really humbled and honored that you took time out to support this, and you know that I'm not here to play any kind of games with you.
I know, and I understand that.
And I want to get the message out. So I'm learning, and I want my viewers to learn too.
Exactly.
So I'm excited that this show, about the topics that I'm going to be covering, it's going to be finance, it's going to be wealth, it's going to be about business, it's going to be about lifestyle, it's going to be about everything, inspiration, spiritual. Anything that you can think of that I go through, and I'm like, I have an aha moment, I want to get it on a show.
Yes.
But I'm also excited that you were able to share this information with me and give me the peace of mind like you spoke about earlier, and hopefully gave everybody out there a peace of mind.
Well, I hope so, because one of the things I believe in is sharing. Okay, I'm not going to say I have a wealth of knowledge, but I've been around for over 30 years in business. I think I've set up a successful practice, and I have a nice office. I'm not bragging, folks. I have a nice office. We have 6 staff members, and during tax season, I do hire other part-time staffers. I try to help everyone to get the most out of their tax dollars legitimately. Okay, don't ask me to do anything wrong, to put anything wrong on your tax return, but I will do things to help you get back the maximum amount of refund that you can do, legitimately. Okay?
Yeah.
And that's why I say it's very important that you keep your documents, because with your documents, then I can fight for you. Without the documents, it's hard for me to go down there and argue with them if you get audited. But like I said before, in my 30 years of practice, I may have had 3 to 5 audits the most. I can't even, remember, because I never do audits, and most of the time if I do represent someone, it's because they came from someone else and they asked me to represent them, and a lot of times I turn them down because I'm not going to get my name out there. I'm not going to get my name out there on a mess. Okay?
Yeah. So again, thank you guys so much for tuning in to my first episode of Stay Tuned with Stacey. If you like to keep in touch or use my accountant, James Lee, as your accountant, get a consultation, find out more information about starting your business, running your business, you can reach him again. He's located in Baldwin. That's my town, at 1315 Grand Avenue. The number you can reach is 516-292-1983, or just check him out online at lnlaccounting.com, lnlaccounting.com. And as far as I go, Stacey Ciceron, if you want to keep up with me, make sure that you subscribe to my channel on YouTube. Make sure you're following me on all social media platforms at Stacey Ciceron. And to get the real scoop, you want to check out my website, which is staceyciceron.com. As always, thank you so much for tuning in. Thank you so much for watching. And we'll see you in the next episode.
Yes.
Right?
Thank you.
We did it.
Thank you very much. And I hope that you all learn a little something from this, even if it's only one thing. Okay?
Yes.
And we will hopefully do more of these in the future. And thank you again. And
Give me
thank
a
you.
high five.
Thank you. Thank you.
All
Stacey.
right. Ciao.